Welcome to the Live Explore podcast. If you like what you hear, please hit like and subscribe. Welcome, everyone, to the very first Rates and Rants podcast. I'm Sean Payne.
I'm Isaiah Chas.
I'm Stuart Broughton.
And we're going to talk about what's going on in the mortgage industry. Please hit like and subscribe because we'll do this on a weekly basis so you can hear about what's happening in the industry. So let's jump right into it, man. Last 10 days in the mortgage industry, rates were ticking up above 8%. Then there was a little drop back down to maybe like the 7.5 range there. And I know that sounds crazy for the people outside the industry, but right now, like even that little drop can sometimes spur a little bit more activity, which I think like if there's buyers on the fence, maybe some jumped in. But let's just talk about what's going on in the market, what you've seen the last 10 days that way.
Yeah, so last 10 days, we did get a little bit of a dip in rates. We were pushing 8. I mean, we've been watching Mortgage Daily News and what the average interest rate is in the United States.
Right.
That was pushing 8. So now it's what, the 7.49 you're seeing on an average? So yeah, it dropped 0.5%. Not every borrower is going to get that 0.5% drop depending on their credit score, down payment, all that stuff with mortgage rates. That does come into play. But what happened the last 10 days is we've had some data that came out as far as jobs report, the jobs number showing some weakness in labor force, then initial jobless claims was what did it as well. So those two factors came into play to bring rates down.
Yeah, so we had like that job report, and then all of a sudden the headlines are all, the recession's over.
Oh, God.
Right? Like you see like so many like headlines. There's so much clickbait out there. I hope everyone realizes how much clickbait's out there right now with these little changes.
With the media?
With
for
the
sure.
Media.
They're
just like, they're all over the place.
It toggles back and forth. One day we're out of it, then one day we're in it.
Yeah.
And it just constantly gets people on the hook to...
Just want you to read it, right?
To click it. So yeah.
But the reality is, I mean, we're in a market that's difficult.
It is.
Let's just call a spade, right? Like it's a difficult market. The volume's down on our end, mortgages. The volume's down on your end.
Right.
Prices are high. Borrowing costs are high. It's just it's a market that you definitely have to communicate well and be on your game because there's fewer transactions and you want to really make them happen. You want to be able to communicate with your client. What's out there. What options do you have to bring your payment down? We can get into all that kind of stuff, but just to kind of we're in a difficult market for sure.
Yeah, no, we definitely are. No, we're seeing that across the board. People are tightening their belt. I think that way. In some situations, we have insurance issues. So the cost of insurance is going up. So that's affecting everyone's overall monthly total combined payment that way. So it's interesting times. We're going into the winter where sometimes buyers tend to look the other way. They, family stuff, holidays, things like that. Maybe agents stop working too. I've always felt that the market's supposed to be slower months. There's been certainly years I've never experienced that. And I always felt just like, hey, if you keep your nose to the grindstone. But I think this is a little bit different now. Definitely, it's slowing a little bit that way. So I think there's some, maybe everyone's just taking a pause right now or a lot of people are taking a pause just waiting to see what happens in the new year. So I don't know. So what do you anticipate happening?
I think it's going to be quiet for the rest of this year, just to be 100% honest with you.
Certainly.
There's definitely transactions still out there. You guys still seeing with your listings, and sometimes a house will get 10 bids. With rates being where they're at, some people can afford the payment. They're going to go after it, and people are still aggressive on going for homes. So that's still there.
Yes.
But obviously, there's fewer transactions. So
it's interesting that like certain properties, a desirable property that's priced well will still get multiple offers. I think that's what people really need to know is that even though that there is a shrinking buyer's pool, because there certainly is. Listings are continuing. We've had this year after year of just this downward spiral of inventory. And right now, our inventory is, I can't remember the percentage, but it's substantially lower than last year. So even though the buyer pool is shrunk, so has the listing pool as well. And so some properties that are priced right in certain areas are...
going cash.
Yeah, cash. You're seeing multiple offers are still aggressive,
I mean, I wrote on a place in Santa Rosa probably about 2 or 3 weeks ago, and rates were still in the high 7s at that time. They weren't over 8 yet, but they're still high 7s.
Right.
And I ran comps for that prior to writing an offer, and I thought it was priced right on the money. It wasn't underpriced by any means, and it got 5 offers.
Mm-hmm.
So there are people that are willing to pay that high payment. I don't know if there is... I'm sure there's some advice being given that you'll be able to refinance the next 6 months.
Yeah, we've talked about that before,
Right.
No crystal ball, but yeah, I mean, that's pretty much...
I mean, everyone's goal is obviously to refinance down the road. I don't know if everyone's getting the right, advice about the timeline it'll be until you're refinanced.
Because no one really knows.
Right. No one really knows.
I mean, that's really hard to...
Yeah, I mean, like on that note, I think Isaiah as well, tend to take more of a conservative trend where, like, if you are looking to purchase, a lot of people were purchasing this time last year expecting rates to drop
this year,
6 months ago, right?
Right.
And so,
this summer.
We recommend really buy downs are the big thing right now.
Mm-hmm.
But a year buy down, even a 2-year buy down, who knows? Like, if we recommend, like, if you can go for a 3-2-1 buy down just to protect yourself right now to see what happens that way.
Right.
Maybe it doesn't make sense for you. Maybe you don't want to put that much money down, or you can't get a credit from the seller, so you can't do it. But we just, I preach around here at Live Explorer to be more conservative that way, and just hopefully prepare your clients for like the longer haul, because we don't know what's going to happen, how long rates are going to stay up that way. So getting into that, you want to talk a little bit about the
2-1 buy down is actually very popular, but you're right. You want to communicate to the client. Worst case scenario after that 2 years, are you okay with that payment being where it's at?
Right.
So say your rate's 7.5%, right? Like how the 2-1 buy down works. You guys know how it works, but maybe I can explain it more.
Right.
Say the note rate's 7.5%, market rate's 7.5%, and you're getting a 2-1 buy down, so you're really getting 5.5% on the first 12 months of payments for the first year. Then you're getting 6.5%, 1 year, 1% lower on the next 12 months. So you have 24 months. Then going back to the 7.5% at the end.
Right.
There's no adjustable rate. There's no weird stuff like that.
So you know the terms. You know what's coming down the road. It buys you a little bit of time. You're paying down the interest for that portion. So there's no you know what's going to go on.
The seller is prepaying that interest for you.
Uh-huh.
Now, whether you negotiate that into the purchase price or not, you can do that. But yeah, the seller, you can do a lender paid buy down, but that is so hideous. No one will ever do it because the starting rate would be so high.
Right.
Wouldn't make any sense. So the seller has to pay for it. Now, will the transaction happen with that going on? If there's 10 offers, that's probably hard to do.
Uh-huh.
But if you have less offers and you say, hey, look, we might meet halfway if your property been sitting on a while.
Right.
You can negotiate that. But a 3-2-1 would be great, but that's going to be pretty pricey.
Yeah, exactly.
I just looked at one that was a 2-1, I think with a $700,000 loan amount. I think the cost was about near $18,000 the seller had to pay for that 2-1 buy down.
Yep.
And then 3 years where it really jumps up.
Yeah.
Oh yeah, because then you're going to a 4.5% start rate, and the difference between that and 7.5 is pretty big.
Right.
But they're good. They're good if you understand them. If you explain to the client, hey, at that point, if we do, if things do hit the wall. And rates haven't gone down, and rates are continuing to go higher. Are you okay with that 7.5% interest rate?
Exactly.
Can you make that payment?
Right.
And that's what it really comes down to. So being conservative. Always keep that in the back of your mind.
On social media, I still see a lot of messaging from agents saying, like they're trying to pitch like their experience by saying, hey, I've been in a hot market before. Yeah, that was like 18 months ago. And like, hey, I know what it's like where it's really you get beat out, and that's what we're going to be in again. And they could be right in that sense, but it might be a longer holding period than what you expect. And like when that agent tells you that, be like, okay, but did you go through the last downturn? Because that's exact messaging that was said in the last downturn. It didn't work out for a lot of people that way. And that's why you just have to be careful. And like, I don't know, I know you don't pitch this crap, but I've seen, again, in like the last week about down payment assistance programs. And like there's more down payment assistance.
The
like,
Heartbreaker program.
Right. Yeah, exactly. Right. Like here we are again. So we're going to pitch to buyers to come in with no money or very little money down. And then you potentially have a rate that could adjust in a couple of years if you do a buy down, right? And okay, it's not an adjustable, but still, like if you're a first time home buyer,
you're on the hook. There's no free lunch,
right? You may like, hey, like everyone's like, oh, in 2 years, I'll be able to afford that, or if it goes up, and then that's what happened last time, except it was adjustable rates where people came in with no money down, and it was all working until the market slowed. And then all of a sudden it was like, I have to refinance, or I have this bigger payment and I can't pay it.
Well, the big thing is also people aren't really talking about what if values go down?
Yeah, exactly.
I mean,
right?
I'm not trying to pitch bad news or anything, but let's be realistic about everything. If you're in these loans and you want to refinance, you put 20% down, you have a 5% swing.
Right.
You're going to have to refinance with mortgage insurance. Right.
Yep.
So I mean, there's a lot of factors that come into play there. In 2 years, are we going to hold the same values?
Yep.
Right. So that's something you want to talk to your client as well about. Like, hey, you don't know.
And values have softened. And I would say it's very hyper local that way.
Right.
Like some neighborhoods has softened more than others, but they've all like generally softened, especially if you look like back at like the last 8 months or something like that, things have dropped. But like I would say that places that have built neighborhoods, new construction, I would say we're seeing bigger price drops than like more established neighborhoods that way, which makes sense,
Right.
So,
but there's a few things you want to just be, prepared for. Values. Are you okay with that payment? Say values do go down, you're stuck in that payment, and you can't take advantage of a lower rate then because of the value or whatever.
Right.
Are you going to be okay with that? So that's just things that people have to understand moving forward when they do a transaction like this. But I'm a fan of the 2-1 buy down. I think it really helps. With these rates right now, and if you get the seller to subsidize your monthly mortgage payment for 2 years.
Yeah.
Awesome.
Well, it's just important having that conversation that they're comfortable with it. I mean, you and I just had a client where I personally am not a huge fan of the buy down just because I think you're still paying for it somehow. I understand that your rate is lower at the beginning, but with the clients that we had, they loved it because they were totally okay with that higher payment in 2 years.
Right.
But they just wanted the comfort of having a lower payment for the first 2 years because they expected that in 2 years at their current
income could go up.
Exactly.
Things can change for the family.
Yeah.
Yep.
Right.
Exactly.
Yeah.
So for some people, it totally makes sense. Like I said, I haven't always been a huge fan of it, but I think if the buyer totally understands what's involved with it, it can make sense for a lot of people.
Yeah, I agree with you 100%.
Yep. On that note, what was the messaging of the Feds today? I think.
So Powell spoke again. He still has kind of a hawkish view, on rates where inflation is. So I think he's gonna hold steady on that.
Yep.
But we have had last 10 days, the jobs report, weakening labor force. We're starting to see a little bit of cracks.
Start the cracks. Yeah.
Right, the cracks we've been talking about for a year. Like, are we going to get any help, any reprieve on rates? That's it. Inflation data, employment data is what's driving everything right now. So, companies with these higher rates, it is going to hit their bottom line. They are going to start, reducing their costs, reducing labor, right? I mean, that's all going to come into play here. Just hasn't hit yet.
Right.
It's starting to, but it just hasn't hit yet.
Right.
I just saw, I forget who, but they were starting a round of layoffs. It wasn't a huge amount. It was very specific. It was a small amount, but they were starting another round of layoffs.
Right.
So.
I mean, tech companies are doing it, but you're hearing from other sectors too that are starting to do it as well. So.
Right.
I mean, it's that money burns out, right? Like with these higher rates and all that, all that money that was circulating for the last few years here, I think is starting to dwindle.
Right. Yep. Well,
do you want to talk about current rates right now?
Yeah, let's talk about rates right now.
All right. So
you just want to run through. These are just rates fluctuate from day to day. So this is just an idea.
Disclaimer: this is not an intention to commit to a loan or lock an interest rate or anything like that.
Right.
Rates can fluctuate. Everything is down payment, credit score, occupancy driven for mortgage rates. But right now, so like I've mentioned before in the past, I'm a wholesale mortgage broker. I got away from the retail model.
Right.
Just found that to be too expensive. The rates are too high, and that's still the case now. And I will stand on that all day long. But right now, with a 30-year fixed, I just priced one out. 25% down, good FICO score, 7.25 on a conforming 30-year fixed.
Okay.
No points. You can get to the high sixes with a point on that. FHA, VA, Govy deals are the rates are awesome on those. Right now, 6.625, 0 points.
Right.
With a good credit score, 3.5 down on FHA. You get down to 6.25 a point. So if maybe the seller wants to pay a point, you don't have to do the 2-1 buy down, but you want low sixes, you can get that with an FHA or VA deal. Jumbo, that has gotten a little bit better, still kind of up there a little bit, but right now 7.25, 0 points. 6.875 at 1 point. That's with 25% down on a good credit score on a jumbo loan. Again, those can fluctuate, but that's just what I was pricing out today in my pricing engine. So.
And for everyone watching this, we're recording this on the Thursday, November 9th. You'll probably see this on Monday, so rates might be a little bit differently then.
Who knows?
Hopefully they're lower.
Yeah.
But we have, to as hard as this year has been, just with inventory, rates, cost, all that stuff, it is nice to see that we were hitting 8, and now I have products that I can get into the high 6s now.
Right.
That definitely, when I'm having a conversation with someone, that's a lot easier to stomach than an 8 in front of it.
Yeah.
Right? So
that's understandable. So let's wrap this up. If someone wants to get a hold of you and talk about rates or talk about loans, what's the best way to get a hold of you?
Yeah, you can call or text me 415-987-8184.
Okay. Cool. And then Isaiah, if we have a buyer that wants to start the home buying process, how do we get a hold of you?
My cell is most likely easiest, 707-508-6390, or stop in Live Explore office and say hi to any of us.
Play pickleball on Friday, right?
Yep, there we go. Hey, thank you for joining us. Again, if you like this content, please hit like and subscribe, and we'll do this on a weekly basis to give you an update. See you later, guys.
Thank you.
Welcome to the Live Explore podcast. If you like what you hear, please hit like and subscribe.